Before you trust your next Social Security check, you need to hear this. Millions of Americans believe their Social Security money is safe, but right now, there are quiet changes happening that could shrink your monthly check without you even realizing it. In fact, there are 7 warning signs that your benefits may already be getting smaller. Most people miss these signs completely until it is too late and thousands of dollars are gone. In this video, I am going to show you exactly what those signs are and why the government does not want people talking about them. Make sure you watch until the end, because the last sign could affect every single Social Security recipient. If you made it this far in the video, it means you care about protecting your future and staying informed. That is exactly why this channel exists. This channel is built specifically for people like you who want simple explanations about Social Security, retirement benefits, financial changes, and government updates that can affect your monthly income. I upload videos on these topics regularly to help you stay one step ahead. So go ahead and subscribe and turn on the notification bell so you are always the first to know when a new important update is posted. If you are someone who depends on Social Security, or you plan to depend on it someday, you really need to pay attention to what is happening right now. A lot of people think their Social Security check is safe and that nobody can touch it, but the truth is that things are changing in ways most people do not even notice. The government has been making quiet moves that are slowly shrinking your Social Security check. And if you don't know what to look for, you could end up losing thousands of dollars over time without even realizing it. Today, we are going to talk about 7 clear signs that the government is making your Social Security check smaller. And by the end of this video, you are going to understand exactly what is going on and what you can do to protect yourself. Let us start with something that affects every single person who gets Social Security, and that is the cost of living adjustment, or what most people call the COLA. Every year, the government is supposed to raise your Social Security check a little bit to keep up with rising prices. The idea is simple. If groceries cost more, and gas costs more, and rent costs more, then your check should go up too, so you can still afford to live. But here's the problem. The way the government figures out how much to raise your check does not match what you're actually paying at the store. They use something called the Consumer Price Index for urban wage earners, and this formula tracks the spending habits of younger working people, not retirees. If you're retired, you're spending way more money on things like doctor visits, prescription drugs, hospital stays, and health insurance. Those costs are going up way faster than the general cost of living, but the formula the government uses does not give enough weight to those expenses. So what happens is your check goes up by maybe 2 or 3%, but your actual expenses are going up by 5 or 6%, or even more. Every single year you fall a little further behind, and over 10 or 20 years of retirement, that gap becomes enormous. Studies have shown that Social Security benefits have lost more than 30% of their buying power since the year 2000. That means if your check could buy $100 worth of stuff back then, it can only buy about $70 worth of stuff today. That is a huge cut to your income, and it happens so slowly that most people never even noticed. The second sign is something that really frustrates a lot of people, and that is the way Medicare premiums eat into your Social Security check before you even see it. Most people who are on Medicare have their Part D premium taken directly out of their Social Security check. So even when you get a cost of living raise, a big chunk of that raise gets swallowed up by a higher Medicare premium. Sometimes the Medicare premium goes up by so much that your check actually goes down, even though you were supposed to get a raise. Think about that for a second. The government tells you they are giving you more money, but then they take more money out from Medicare, and you end up with less than you had before. This has happened multiple times over the past several years, and it is one of the sneakiest ways your check gets smaller. A lot of people look at the COLA announcement and get excited, thinking they are going to have a little extra money. But when they see their actual deposit in January, it is barely different, or sometimes even less. The connection between Medicare costs and Social Security is something the government does not talk about very much. but it is one of the biggest reasons your check does not go as far as it should. The third sign is about taxes, and this one makes a lot of people really angry when they find out about it. Did you know that you might have to pay federal income tax on your Social Security benefits? A lot of people do not realize this until they file their taxes and get a nasty surprise. Back in 1983, the government decided that if your income is above a certain amount, you have to pay taxes on part of your Social Security. At that time, they set the income thresholds at $25,000 for a single person and $32,000 for a married couple. Here's the thing that makes this so unfair. Those thresholds have never been adjusted for inflation, not once in over 40 years. Back in 1983, those were considered middle-class income levels, and only about 10% of Social Security recipients had to pay taxes on their benefits. But because those numbers have never been updated, more and more people get pulled into paying taxes on their Social Security every single year. Today, about half of all people who receive Social Security have to pay taxes on their benefits. The income levels have not changed, but everything else has. Wages have gone up, cost of living has gone up, and even Social Security benefits themselves have gone up because of COLA adjustments. So now people who are not wealthy at all, people who are just getting by on modest incomes, are being forced to pay taxes on their Social Security checks. This is basically a hidden benefit cut because the government does not have to vote on it or make any announcement. It just happens automatically as more people cross those outdated thresholds. Some people end up paying taxes on up to 85% of their Social Security income, and that can take a serious bite out of what you actually get to keep. The fourth sign has to do with the full retirement age, and this is one that younger people especially need to understand. The full retirement age is the age at which you can start getting your full Social Security benefit without any reduction. It used to be 65, and for a long time that is what everybody expected. But the government has been slowly pushing that age higher. For people born in 1960 or later, the full retirement age is now 67. That might not sound like a big deal, but think about what it really means. If you were counting on getting your full benefit at 65, and now you have to wait until 67, that is 2 extra years of working, or 2 extra years of waiting without getting paid. And if you decide to start collecting at 62, which is the earliest you can file, your benefit gets reduced even more than it used to, because the gap between 62 and 67 is bigger than the gap between 62 and 65. When the retirement age was 65, and you filed at 62, your benefit was reduced by 20%. Now that the retirement age is 67 and you file at 62, your benefit is reduced by 30%. That is a huge difference, and it is a permanent reduction that stays with you for the rest of your life. There has also been talk in Washington about pushing the retirement age even higher to 68 or 69 or even 70. Every time they raise that age, it is the same thing as cutting your benefits, because you either have to wait longer to get your full amount, or you accept a bigger reduction for filing early. This is one of the easiest ways for the government to cut Social Security without actually saying they are cutting it, because they can just call it an adjustment, and most people do not realize what it really means until they are already affected. The fifth sign is about something called the earnings test, and it catches a lot of people off guard. If you are collecting Social Security, but you have not yet reached your full retirement age, and you are still working, the government will actually take back some of your Social Security money if you earn too much. In 2024, if you earn more than about $22,320 a year from working, Social Security will take back $1 for every $2 you earn above that limit. So if you are trying to work part-time to make ends meet, which a lot of retirees have to do because their Social Security check is not enough to live on, you can end up losing a big chunk of your benefits. Now, the government will tell you that this money is not really lost, because once you reach your full retirement age, they will recalculate your benefit and give you credit for the money they withheld. A lot of people need that money right now. They cannot wait years to get it back, and the recalculation does not always make up for what was taken, especially if you do not live long enough to break even. This earnings test is basically a penalty for working, and it discourages people from earning extra income during their early retirement years. It also means that your effective Social Security benefit is lower than what you were promised if you need to keep working, which more and more Americans are finding they have to do. The sixth sign is something that is happening right now with the Social Security Administration itself, and it is really concerning. The agency that runs Social Security has been dealing with serious budget cuts and staffing reductions. They have been closing field offices, cutting back on phone support, and reducing the number of employees who process claims and handle appeals. You might wonder what this has to do with your check, but it actually has a huge impact. When there are fewer workers processing claims, everything takes longer. People who apply for disability benefits can wait months or even years to get approved. People who have problems with their payments have to spend hours on hold trying to reach someone who can help. And when there are errors on your account, which happens more often than you might think, it takes forever to get them fixed. Some people have had their benefits calculated incorrectly and did not even know it. They were getting less than they were supposed to, but because the system is so overwhelmed and understaffed, nobody caught the mistake. If you do not check your own records carefully, you could be leaving money on the table and not even know it. The reduced staffing also means that people are not getting the help they need to make the best decisions about when to file and how to maximize their benefits. A lot of people end up filing too early or missing out on strategies that could get them hundreds of dollars more per month, simply because they cannot get an appointment or talk to someone who can explain their options. When the government cuts the budget for Social Security Administration, it does not directly cut your check, but it creates an environment where you are more likely to get less than you deserve because the system is not working the way it should. The seventh sign is the big one that has been in the news for years, and that is the fact that the Social Security Trust Fund is running out of money. The latest reports say that if nothing changes, the trust fund will be depleted around 2033 or 2034. When that happens, Social Security will only be able to pay out what it collects in payroll taxes, and that would only be enough to cover about 77 to 80% of promised benefits. That means if nothing is done, everyone's check could be cut by 20 to 23% almost overnight. That is not a small cut. For someone getting $2,000 a month, that would mean losing $400 to $460 every single month. For someone getting $1,500, that would be a loss of $300 to $345. These are life-changing amounts of money for people who depend on Social Security to pay their rent and buy their food and cover their medications. Now, a lot of politicians say they will never let that happen and that they will find a way to fix it. But so far, nobody has passed any legislation to actually solve the problem, and the clock is ticking. The longer they wait, the harder it will be to fix. The possible solutions that have been talked about include raising the payroll tax, raising the full retirement age even more, reducing benefits for higher income earners, or changing the COLA formula to make it even less generous. Every one of those solutions involves either paying more or getting less, and some of them are already being implemented slowly, as we talked about earlier. The uncertainty alone is damaging because people cannot plan for retirement when they do not know what their benefits will actually be in 10 or 15 years. So what can you do about all of this? The first thing is to stay informed and pay attention to what is happening with Social Security. Do not just assume everything will be fine. Check your Social Security statement every year and make sure your earnings record is correct, because any mistakes could mean a lower benefit for you. You can do this by creating an account at ssa.gov and looking at your statement online. The second thing is to think very carefully about when you start collecting. Filing early means a permanent reduction in your monthly check, and for a lot of people it makes more sense to wait at least until their full retirement age or even until 70, when their benefit maxes out. Every year you delay past your full retirement age, your benefit goes up by about 8%, and that adds up to a lot of money over time. The third thing is to plan for the possibility that benefits could be reduced in the future. That means saving as much as you can on your own, whether that is in a 401k, an IRA, or just a regular savings account. Do not put all your eggs in the Social Security basket, because the basket might have holes in it. The fourth thing is to understand how taxes affect your Social Security and plan accordingly. If you can keep your total income below those thresholds we talked about, you can avoid paying federal taxes on your benefits. A Roth IRA is a great tool for this because withdrawals from a Roth do not count as income for the purposes of taxing Social Security. And the fifth thing is to make your voice heard. Contact your representatives in Congress and tell them that protecting Social Security is important to you. The only reason politicians have been able to slowly chip away at these benefits is because not enough people are paying attention and holding them accountable. The bottom line is this: your Social Security check is under attack from multiple directions, and most of it is happening in ways that are hard to see unless you know where to look. The cost of living adjustments are not keeping up with real expenses. Medicare premiums are eating into your raises. Taxes on benefits are hitting more people every year because of outdated rules. The retirement age is going up, which means your benefits are effectively going down. The earnings test penalizes you for working. The agency itself is being gutted, so you cannot even get the help you need. And the trust fund is heading toward a crisis that could result in across-the-board cuts. None of this is an accident. These are all choices that have been made or allowed to happen by the people in charge, and the result is that your Social Security check buys less and less every year. You worked hard and paid into this system your whole life, and you deserve to get what you were promised. But the only way to make sure that happens is to understand what is going on and take steps to protect yourself. Do not wait until it is too late. Start paying attention now. Start planning now, and start speaking up now. Your future depends on it. Thank you for watching this video all the way through. If you found this information helpful, please hit the like button and share it with someone you care about who needs to hear this. And if you haven't already, make sure to subscribe to the channel and turn on notifications so you don't miss any of our future videos, where we break down important money topics in plain, simple language that everyone can understand. We're here to help you protect your money and make the best decisions for your future. And we appreciate every single one of you for being part of this community. Take care of yourselves, and we will see you in the next one.